Absolutely. So since Adani is the big story of the day, let's take that forward, right? The Adani Group has indirectly acquired more than 29% in news broadcaster NDTV. The Adani Group's unit has also announced an open offer for an additional 26% stake at 294 rupees per share. Now, this open offer will cost Adani almost 500 crore rupees. Yash, my colleague, has been tracking this closely. He's here with more details. Yash, first, if you can tell us how the deal is structured and what's next for NDTV.
So that's correct, Sonia. So first, I'll quickly speak about the shareholding pattern at NDTV itself. The promoters, Pranoy Roy, Radhika Roy, both together hold a little over 32% stake. Another promoter entity called RRPR held around 29% stake, and it's this 29% stake of RRPR that has been acquired by this entity called Vishwa Pradhan Commercial, which is a wholly owned subsidiary of the Adani Group. Interestingly, the announcement to acquire Vishwa Pradhan Capital also came just minutes before they announced the acquisition of RRPR's 29% stake in NDTV. Now, speaking about the deal structure, Vishwa Pradhan, which, as I said, is a unit of Adani Group, has converted warrants issued by RRPR to the company, which represents ownership of 29% stake in NDTV. Now, since Vishwa Pradhan Commercial is a unit of Adani gets an indirect holding of that 29% stake in NDTV. That's essentially the structure that has been panned out. As far as what's next, since it's an acquisition of more than 25% stake with voting rights of more than 25%, it triggered an open offer. This open offer would be for another 26% stake in NDTV, and the cost would be 294 rupees per share, which is about 25% discount to current market price of NDTV. What's in store for the Roys? Essentially three options. One is that if they feel it's a hostile takeover, they do have the option of going forward and contesting it on the legal ground. Second one, they can tender in their shares as far as the open offer is concerned and exit NDTV completely. And the third one is to co-promote NDTV with the Adani Group.
All right, hang in there, Yash. Usually this space was known to have not much news, but just the last 1 year, we've had the Z-Sony announcement, we've had the Inox PVR merger, we've had a new sports player and the IPL auctions, etc.
So, Inox PVR is not directly indicative, I mean, of what's happening. I used to track this sector
I know, but it's just that we don't realize
at least
in the last 1 year
so much activity
has taken place. Yeah. Yes, but Yash, you're still with us. Who are the bigger shareholders in NDTV, and what happens? Will they sell in the open offer?
Well, Mangalam, if you look at the shareholding pattern, it itself gives you a very interesting story, and I'll speak about that. So, three sets of shareholders when it comes to NDTV, and these three sets are: one is Drolia Agencies, the second one is GRD Securities, and the third one Adesh Broking. These three have interlinked directors amongst themselves. I am not saying that this has to pan out the way I am explaining it, but the thought is that if one of this shareholder also decides to participate in the open offer, it's likely that all three would. And if that happens, approximately 6% of shareholding gets participated in the open offer straight away. The second interesting part is LTS Investments, which owns a large chunk in NDTV, about 9.75% stake. The same FII, that is LTS Investment, also holds stake in various Adani Group companies, be it Adani Enterprise, where they hold 1.7% stake, Adani Power about 1% stake, 1.6% stake in Adani Transmission, also 1.3% stake in Adani Total. It is, to one's assumption, that if they are holding stake in Adani Group companies, it is likely that they could participate in this open offer at NDTV also, which will help Adani raise its stake in the company. These two sets of investors, if they come together, that essentially takes Adani's holding in NDTV straight to 45%. So a lot rides on these two shareholders, and that was an interesting bit which came out of the shareholding pattern itself.
Okay, thanks a lot for that, Yash. Well, a very surprising, shocking to many, the method in which this takeover was done, hostile takeover, as many are calling it. Abneesh Roy, the Executive Director, Institutional Equities at Edelweiss Securities, joins us now. Abneesh, the big move has already come in the NDTV stock, right? I mean, it's up 280% in the last 12 months. Your view first on the stock, how does one approach it, and then on the deal itself?
Yes, thank you. Yeah, you're right that stock has moved up. In contrast, if you see Z and Sun TV have not done relatively that well. Of course, media industry has gone through extremely challenging times because of the COVID, then the advertisers cut because of margin pressure, which we think will recover in H2. Coming to this specific thing, there are three key points. I think this was expected that Adani would acquire someone. If you remember, they had set up this media vehicle a few quarters back, and then they acquired stake in Quintilion. See, media is extremely important, right? For such a large conglomerate, one of the wealthiest Indians, media is fourth estate in the democracy. So it's extremely important. And NDTV is one of the few players which is a credible channel. And of course, there was this issue of this stake, which was there, pledge stake, etc. So definitely, this is a logical extension of that. I think based on the comments by the founder, it seems that clearly this is not as per their knowledge, as per their approval. So need to see how things shape up in terms of founder versus Adani. But yes, the way things are panning out, I would expect that a lot of the investors, because of the up move in the stock price also, and because Adani obviously are far, far bigger conglomerates, I think Adani eventually should succeed, but we need to see in terms of approvals, in terms of how the founders react. That will be something interesting to watch.
What do you think would be the future, the course of action for the founders? That's point number one. And secondly, with the kind of rally that we've seen in the stock already, maybe some saying that, the street was anticipating a deal of this sort to come by at some point in time. Do you think the best is behind the stock of NDTV?
So if you see, this is not a very diversified company. So it has got just one very strong channel in the English space, Hindi extremely competitive. So yes, I would say that yes, the up move in the stock clearly is very different versus what you've seen in other media stocks. Second, of course, is this could potentially be negative for the listed companies like TV Today, because in news space, if Adani starts being the real promoter of NDTV, clearly it means completely different competitive dynamics for TV Today. So third, of course, is I would expect if Adani finally acquires this company, becomes the main owner, I think they will be not happy with just one or two channels. They will like to scale it up to regional news channels in a far bigger manner. So those could also see some M&A, some launches, etc., which was missing, right? So yes, media is an industry where disruption will keep happening. So consolidation in stronger hands will keep happening. But we also need to see whether Adani will be happy with just news, or eventually they will do GECs also, because just having news longer term, I don't think it makes too much of sense. But yes, GECs is the big revenue opportunity, longer term.
Abneesh, you've looked at media for years now. You look at FMCG as well. From an investment standpoint, Abneesh, despite this deal taking place, would you be recommending to your clients that, yes, media is a place to get into for long-term returns? And if so, which stocks?
Sure. So yes, media is extremely important for any Indian consumer. The good part is we have got most of the large entities, PVR plus Inox, becoming very large investable ideas. Similarly, Sony plus Z also. So I would say, unlike say FMCG sector, media is going to see far bigger disruption. So there will be periods where the stocks don't do well. But taking into consideration valuation and the potential mergers which are happening, we will continue to prefer Z Entertainment and PVR from a relative basis, because in Q2, most of the movies have not done well. PVR and Inox could underperform in the very near term. And Z could see much better H2 because FMCG companies will ramp up advertising. But from a structural perspective, PVR and Inox will become extremely, extremely monopolistic kind of a standing. Of course, there is competition, but yes, they will completely dominate post the merger.
Okay,
so
but Abneesh,
yes,
my point is that would media become a sector which would be a long-term portfolio investment? Say from a 10-year horizon, it's in your portfolio and you forget about it. Is the sector that kind of an investment profile for you?
So it's definitely has much higher risk, but the good part is companies like Z or even TV18 and all these companies are investing into the future also. So they are investing in OTT. So it's important to see these companies as a content creator rather than a broadcasting channel or as an OTT. That's very important. So someone like a Sun TV will be much lower in terms of pecking order because their aggression in OTT is far lower. Someone like a Z and Sony will be having sports, will be having movies, music, plus the TV. So I think good to go for diversified. But as I said, the risk in media is high. But yes, from a 5-year perspective, both PVR and Z can make a lot of money given the valuation and given the merger benefits which will accrue.
So, since we're talking about 5-year perspective, right? What's your view on NDTV for the longer term? Okay, now this news has played out, and perhaps the news is in the price for now. But as you rightly pointed out, I mean, such a large conglomerate acquiring a media company, you know, it's having it as its fourth estate is in a way prestigious for them as well. They would like to grow it in a certain way as they have done other businesses. Do you think the long-term scalability and of course, you know, at the same time trying to dwarf competition too, do you think they'll be successful in that and scale this business to new heights? And if yes, from a slightly longer-term perspective, does it still make sense to get into a stock like NDTV?
So 3 things. We don't obviously cover this name NDTV. But yes, if I have to give my view, the stock has run up a lot. So we need to be careful on that. Second bit is if you see the listed news companies like TV Today have not really created that much wealth over a longer term perspective because news is far, far more fragmented, unlike GECs. So yes, if NDTV in the longer term again has a GEC, if you remember, they had got this GEC, then they spun off and all that. So yes, for real wealth creation, news is not enough because it's extremely fragmented. Good for the large conglomerates, but is it good for the minority shareholder, medium long term? I would say that GEC is extremely important.
All right. As employees of a news channel, we'll only be happy that, you know, if it is good for investors from a long-term standpoint as well, that would, you know, keep us longer in the business too. But Abneesh, let's move on to a lot more stable sector, and I'd request you to wear your FMCG analyst hat. The second half of this year, everyone's hoping that, you know, gross margins will expand. The question is that will that gross margin expansion flow through to the EBITDA margin as well or not? Because come second half, companies will have to, like you said, from a media standpoint, increase their ad spends, increase some of the activities that they had curtailed during the pandemic itself as well. And then there would be higher competitive intensity because now prices would come down uniformly for a lot of the players in the market. So does that mean that EBITDA margins will still take a while for all the FMCG companies to recover?
No. Yeah. Thanks, Mangalam. Good question. EBITDA margins will clearly improve in H2. Case studies, key companies, for example, Tata Consumer, if you see, has already played out in the last 1 year. Yes, advertising spends will go up in H2, but please note, small regional companies don't come back very quickly. So they may come back, say, after 3-4 quarters in terms of advertising spends, but such companies have not made much profit, so they will not come back in terms of advertising. H2 versus H1, Z will see very good recovery. But will it go back to pre-COVID level? No, it will take at least 1 year or maybe even more to go back to the pre-COVID level in terms of advertising as a sales percentage. So yes, in H2, essentially, wherever palm oil related input is there, soaps, biscuit, noodle companies, we will see gross margin expansion. And my sense is around 60% of that will flow to EBITDA margin expansion. May not be true for Godrej Consumer because Godrej Consumer has said they will ramp up advertising far more. But most other companies will see that benefit.
And since you spoke about Godrej Consumer, Abneesh, a couple of other companies which have management changes which will play out over the next couple of months. We will have Colgate, Prabha Narasimhan joins in, and Jubilant Foodworks as well. Both of them, what are your thoughts on these stocks?
Yeah, you are absolutely right. A lot of management changes happening. We will prefer companies in which diversified play is there. So if I compare Colgate versus say GCPL, clearly GCPL is far more diversified. So I'll prefer that. I'll prefer Dabur, for example, where no management change is happening, but more diversified. Similarly, in Jubilant, if you see, because now in-home consumption has taken a back seat, there is more competition by Devyani, Sapphire, and all those also. So I'll be a bit cautious in terms of pecking order. I like Jubilant Foods, but yes, because in-home consumption and more competition, slightly it will be lower in terms of pecking order.
So what are your top picks now in the sector as a whole from the entire basket of stocks that you track?
Sure, thanks. So there are two key things. One is the rural recovery in 75-80% of the states. There is going to be a rural recovery in H2 starting and FY24. There is a problem in UP, Bihar, Jharkhand, Bengal because there is a deficit in terms of rainfall. On an overall basis, rural recovery should start for most of the companies. And second is the raw material deflation, which is going to happen. And third is the market share. Based on this, I like Hindustan Unilever, I like Asian Paints, I like Titan. These 3-4 names will be the top picks. Apart from that, I continue to like someone like a Britannia and even Nestle.
Oil is back at 100, Abneesh. Asian Paints you still like?
Yeah, it's more from a longer term perspective, because if you see the market share gains which are happening, diversified play. Of course, if crude goes up, there could be some near term underperformance. But yes, I do expect that in second half, we will see very strong number. Only thing in paints, because you have asked, in Q2, because of very high rainfall, there could be some postponement of demand which can happen to paint companies in general.
Okay, all right, Abneesh, and I'm assuming that you prefer FMCG from a 5-year perspective over media.
Correct, that's true.
All right, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's Edelweiss Securities giving its comprehensive view on media as well as FMCG. We need to take a short break, but up next,